everyone, and welcome back. You're watching The Money Show on ET Now. Well, what if I were to tell you that when you invest your money and look for good return and wealth creation, be rest assured that your money that's being invested is being invested in companies that are ethical when it comes to environmental norms, social norms, as well as follow the best corporate governance. The best of everything, right? And I'm sure you may be thinking that sounds a little too good to be true. Well, guess what? It's not. It's actually true because you can do so via a brand new, or well, let's not say brand new, but a more developing or a more niche concept of ESG investing that basically takes care of environmental, social, as well as corporate governance norms. These funds follow very, very strict standards of these three parameters, and only if a company scores well on these three parameters do they put their money in these companies or stocks. And now we have our very own, one of the biggest AMCs in India, ICICI Prudential, that will be launching a new fund that is going to be adhering to these stringent ESG norms. It's the ICICI Prudential ESG Fund. And I have the privilege of having with me on the show none other than the fund manager himself, who's going to be taking care of this fund, Mr. Mrinal Singh. Mrinal, it's a pleasure having you back with us today on The Money Show. Many thanks for joining us. So to start with, I've given a very rudimentary description, of course, of ESG. You would, of course, know better. To start with, why don't you share the whole investment strategy, the philosophy of the ICICI Prudential ESG Fund with our viewers, who will, of course, be your potential unit subscribers and unit holders as well.
Thanks, Mobina. Thanks for getting me over the show. And this is something that I'm quite upbeat about, ESG. You've done justice to inaugurate the concept. But then E, as we say, very well known as environmental norms. We can as well supplement it for ethical norms and things like those. S for the social part of things, or sustainability, and G, the governance part, and that includes far beyond the corporate governance, as we as investors, are very particular about. Now, ESG is something that we brushed ourselves 3-4 years ago when we were talking to global investors, and it is already a mega trend outside. From last I saw, there was more than $80 trillion of monies under the ESG umbrella globally. And it obviously began in Europe, particularly in Northern Europe, Nordics, if I may say. And then slowly it progressed on to North America in particular, and most of the developed world. Now, for the last 5 years, we've had a lot of Japanese long-term money also moving in that umbrella. And we obviously have from Far East other monies and Pacific. Well, interesting point is, what does ESG do? And it's not something that comes from the investing world only. With our interactions from our investee companies, we have been seeing for last 4-5 years that more and more customers, more and more regulators, more and more lenders, more and more investors are asking of them, what is that they are doing for the society? How are they contributing to sustainability of resources? How are they dealing with stakeholders on the governance part? And that includes not only shareholders, but also, vendors, customers, employees, ecosystem, and the likes. So, we've seen that of late, from beginning of good to talk about things, it has kind of become a eligibility requirement to potentially participate in a tender, to potentially participate in a business opportunity and likes. Now, in fact, a lot of people in India would have noticed that in the last budget, the government of India also introduced mandatory CSR spending for corporate India out of their profits as a percentage. Now, that's in a way umbrella within the ESG itself. And we are seeing, a lot of issues and concerns being raised by society in general regarding a lot of way the businesses are conducted. That includes governance and not only environment. And it also includes the sustainable part. And there is a myth around ESG. A lot of people think that, it's good to talk to. And what's so great about investing in ESG, maybe it's just one of yet another thing that's something that people talk good about. But, if you look at statistics, if we do a lot of regression and correlation analysis, we find that better ESG companies or better G companies in particular have delivered much superior returns to shareholders and in general all stakeholders. So they are perceived better in their customer set, in the general population. They are rewarded and their price discovery is better in the marketplace. Vendors want to be associated with them. Regulators actually involve them in policy making and things like those. So, for example, the ESG index that has been in existence around for almost 9 odd years, it has done better than the broader index. And by broader index, I mean the Nifty 50. So if you look at the Nifty 100 ESG, that's the index that even we have for our fund. If you notice, it has done well every calendar year. So if you notice, point to point, 3 years, 5 years, 1 year or beyond, or you look at calendar year, or you even for a year like 2020, when we've seen the market coming down and up both ways. So if you take the data from 1st of January all the way till end of March, it has done better than the broader market. And from then on the way up, it has again done better than the broader market. So it's very clear. Better ESG rated companies are finding superior long-term strong shareholders. And I think that's something that is already there in the marketplace, that is already there in the way the business is conducted, that's already being enforced by the regulator and the law. And I think it's only a matter of time when it will become not a peripheral thing, but a very large thing. And most people will align to it. It's already remunerative. And I think going ahead, that would be amongst the biggest options, and if not the only option for investors to walk the path. There is already difficulty in businesses to have, or proposals, let's say business proposals, which are not ESG compliant, to be able to have a financial closure, particularly if you're seeking financial support from multilateral agencies like ADB, World Bank, IMF and the likes. And in fact, a lot of pension funds, a lot of endowment funds are unwilling to participate in businesses which are not rated well in ESG. Again, a myth that I want to address, ESG is not about what you're doing. ESG is about how you're doing. So you could very well be a chemical company and making the most hazardous of chemicals. That does not make it an ESG non-compliant. What makes it ESG non-compliant is if you are releasing into atmosphere, be it air, soil or water, anything that is going to damage the environment. So, well, if you are in a business that is hazardous chemical, that's okay. But if you are also investing into technologies which will ensure that nothing gets discharged in the water, nothing gets discharged in the soil, nothing gets discharged in the air, then you are pretty much ESG compliant and you will be rated and looked upon well in that. You are also expected to deal with your stakeholders well. That includes employees, that includes vendors, that includes shareholders, and it also includes the general corporate governance standards, like how do you dissipate accounts, what kind of disclosures, what kind of interactions you have with shareholders, and the like. So, well, these are all broad parameters. A lot of it is, in a way, already inbuilt into the way people evaluate a business. But then I think the nomenclature emerged in the Western world, and I think we know it. We practice it in one form or the other, even in geographies like India, be it CSR, be it anything. But I think ESG is the right term, globally accepted term, and I think it's the right time to embark upon this journey. In terms of our investment philosophy and the process, we obviously are very well aware about the companies that we are looking at. So ESG has been part of our research, in-house research for quite some time. We also have subscription to a lot of dedicated best practice service providers on the ESG side. They do audits, they do scoring, and they have global best practices aligned. We obviously conduct our own effort and research around that. And once the businesses that pass the ESG muster, once the tick box is checked, we evaluate them for potential return. And that is how we place them into our portfolios. And an ESG portfolio would look like, not only ESG compliant, but could also offer good returns to our shareholders, which is what we believe in, which we are very confident about.
Wow, so your task is cut out for you, Mrinal, because I'm sure picking a company like this, which is ESG compliant and which of course has the potential to be a wealth creator for its investors as well, is going to be requiring a lot and many hours of research, on you and your team's part. So good luck with that. 2 points interestingly really stood out. Firstly, the way that ESG has picked up as a theme globally, and the fact that, the Nifty 100 ESG, which is, by the way, an index of companies or stocks that are compliant with ESG, has actually done better than the Nifty 50. So let's talk about that bit first, the return bit, which you as well flagged off in your answer, Mrinal. Do you believe that, this is a trend that will continue? Because any which ways, when you're picking out companies that are ESG compliant, you're going to be looking at the best management practices, the most ethical standards, so on and so forth, among a long list of parameters. Do you think that as a theme itself is something that will work very well, because we are in the midst of so much uncertainty any which ways?
Well, there are two approaches to it. We might actually take a rejection approach or a selection approach. What ESG, the layer of ESG does is it takes a rejection approach wherein, these are the businesses which don't seem to be complying in spirit and action to the theme of ESG or to the concept of ESG, you take them out. And then comes the selection approach wherein you would look at, okay, this is an ESG compliant business. We might also do further financial analysis and we might believe, okay, this just also offers superior return. But having said that, it also needs to be kept in mind that a market has a lot of participants. So businesses which are better governed will obviously have faster and better price discovery. At times, very often you see businesses which look undervalued, and there might not be any great financial parameter to justify that valuation that it actually shows in the marketplace. It's just that, maybe it's not ESG compliant in a good way. So a lot of investors shy away from touching that stock and they don't want to be associated with maybe a badly governed business or a badly managed business from an environmental or a social perspective. So things like those actually do have an impact. They already do in the marketplace. So better governed business, even if there was no ESG around. So if we go back all the way to 30, 40 years of existence in the market, not only in India. So we have the BSE Sensex since 1979, and we have the Dow Jones since more than 100 years. So if you look back at all the data, better governed businesses have delivered better returns. So that comes intuitively to all long-term shareholders. There's nothing unusual about it. The data just confirms that. So do I believe that obviously if businesses are going to invest into sustainability of resources that they consume or anything around that, or are they going to be environmentally more sensitive and responsible? I think they're investing into longevity of their revenues. They're investing in the longevity of the ecosystem. They're investing in the longevity of their profits. And that obviously is something that all long-term shareholders want to see. So it's very logical. It dovetails in a way into a business, a characteristic that you want to see in a good investing company anyway. So I think that's something that, it is not surprising to me at all that, better governed or better ESG companies deliver better returns. That ought to have been the case. But I'm surprised that it has done well in every way that you want to slice and dice the data. So if you just as a representation use Nifty 100 ESG Index, it does well than the broader market in every way. You can dissect it in the way you want. I won't make a futuristic statement going ahead that, but in my assessment, I would think that, there is no reason to believe that better governed companies, better environmentally sensitive and responsible companies, better socially sensitive companies should do better. Yes, because they would find better shareholders, they would find better price discovery. They are investing in their longevity of their P&L, and that would reflect upon their stock prices and price discovery anyway.
Okay. Just one more question. Do you believe that there is scope in India for even picking out, stocks? Because Mrinal, you have a very stringent set of parameters as well. I'm sure that you're going to be following, would require a lot of research, etc. And yes, you did say that, globally there's been a lot of money, trillions of dollars that has flown into this entire ESG theme. Do you believe in India as well, there will be scope to find companies that do meet these stringent parameters and thus will help sort of generate wealth for, unit holders?
So interestingly, I get asked this question quite often, and you'll be surprised. We have a large set of listed companies, I think more than 3,500 stocks, and most coverage is, channelized towards the top 200, maybe 250 stocks. So it does leave a lot of companies which are under-researched and obviously are maybe small or mid-cap in nature, but then they very well could be very much ESG compliant. And then in any case, as capital allocators, what are we? The markets are actually efficient capital allocators. When we are going to prioritize businesses that are going to be ESG compliant to receive capital, I think that itself is an incentive. The government, by enforcing a CSR, is already hinting in that direction. The shareholders are actually asking for it. The customers are asking for it. I don't think businesses have much of a choice going ahead. They have to comply. If you won't comply, you will be left. You will not find investors, you will not find lenders willing to lend. You will not find customers wanting to associate with you. You will not find yourself in the good eyes of the regulator or the government. So, I don't think there's a choice. It might look like it's too far away. It's not far away. We have plenty of choice already. And do we see scope increasing? I think the scope is going to be mega going ahead. And this is a good trend. This will force businesses which are anyway not or have been on the fence trying to think should we go ahead and put monies in that direction. I think it creates the right kind of incentives. So this is the right thing to do from our part, from the market's part. And I have no doubt in my mind that the industry, the economy, the businesses will move in that direction. Actually, in fact, I see the businesses already doing that. And it's not something that they dispute. In fact, the discussions happen around how and what can we do better in that space itself. So yeah. I think we have enough scope, and the scope will only increase going ahead.
Right. Excellent. Well, Mrinal, we wish you all the very best, for this new fund launch and of course in managing the fund as well. And yes, I hope to chat with you once again a couple of months down the line as well on more on the fund as and when, of course, the fund gets into the steady rhythm of things. All the very best once again. That was Mrinal Singh, the Deputy CIO of Equities with ICICI Prudential Mutual Fund, who will also, of course, be handling the NFO. For now, quick break on the show. Don't go anywhere.